I'm going to take the conversation forward. Mr. Sivaramakrishnan Ganapathi, Managing Director of Gokaldas Export, joins us, and then we've got Sanjay Jain, Managing Director with TT Industries, to take a conversation forward. Mr. Ganapathi, I just want to understand, currently one side there is an uptick in cotton demand, uptick in cotton prices, and there is a huge massive business reorientation which is happening in the textile industry. When you are speaking to your buyers and when you are renegotiating contracts, what is the status? Are buyers ready to pay more? Are they ready to realize that we are going through massive inflationary pressures?
Good morning. Thank you for having me. Buyers are quite closely plugged into the entire value chain. So they are aware that raw material prices are going up. So cotton prices have gone up pretty stratospherically. So have the MMF prices, but to a lesser extent. So there is a price pressure across the spectrum in terms of all raw materials. So buyers are aware, and buyers will have to shell out more for absorbing the raw material costs. The issue always is, how much does different parts of the value chain absorb? By and large, our endeavor would be to push it back to the buyers, and in turn the buyers to the end consumers. With an inflationary market going on globally, there would be some amount which will get passed on to the end consumers, but some amount of pressure will come across value chain players to absorb some of these price increases. And this is where governments move to constitute committees to look at dousing the cotton prices in whatever form ways they can. Is very, very critical and important.
Okay. How do these FTAs, when they're signed with respective countries like Australia and other exporting nations, how do they change things for Indian garment industry?
So FTAs have been signed with Australia, UAE, and there is an FTA in active pursuit with United Kingdom. If you look at these three markets, United Kingdom is the biggest market, and it is anticipated that by end of this year, we most likely should have that FTA signed up. And if that happens, it opens up a pretty significant market, for a low duty or a duty-free access for Indian garment suppliers. Bangladesh and to an extent Vietnam, which used to enjoy duty-free access to Europe and UK, would now have India join in as well with duty-free access. It changes the game considerably as more and more European sourcing would also come to India, which were hitherto going to Bangladesh. And Europe is a very, very large market. It's almost about 25% of or above of the global market. Now, keep in mind that after UK, the government of India is targeting an FTA with Europe as well. If that materializes, that will be very, very significant for India.
Now, Mr. Ganapathi, if I could just take forward that question with you, talk about what really is happening with the raw material cost pressures, the supply chain dynamics, etc., because it's pretty much impacting, across segments and sectors. Wanted to understand, what is the sense that you are getting from your clients? How is it that they are looking at price increases? Because it seems like this is just the start of it all.
We don't know if it is the start of it all, because cotton prices have already gone up significantly. And I think now it should stagnate or start tapering down going forward. So we are at the fag end of the price rise, in my opinion, rather than at the start of the price rise. So whatever has happened has happened. And I'm hoping that things may only improve going forward. So with the increase in cotton prices, yarn prices started going up. So that put pressure on the fabric mills. Now, with the government intervening and at least signaling to the textile value chain that, they need to control exports and support the domestic industry, because a lot of value addition happens in India, especially in the cotton value chain, that, I feel that the price rise should at least cool off. And, if there is a slow decline, that will be great, so that further raw material price inflation is averted, and we get back to some semblance of normalcy. I wouldn't say I'm terribly optimistic, but at least the worst is what we are feeling at the moment. I hope it can only be better from here.
Oh, that's a very categorical clarification that you're putting out for our viewers, and I'm sure your investors as well are going to benefit from that. Mr. Jain, if I could ask you really on pricing. Cotton prices have more than doubled since the month of October, as we understand, previous year that is. How much of the price increase have you been able to pass on to your clients and consumers? And I also wanted to understand, in continuation with what Mr. Ganapathi was saying, whether or not there is any lag effect from where the uptick in cotton prices actually comes in to when you actually pass it on to your clients.
Good morning to everyone. Yes, there's always a lag effect. And it almost takes 3 months to 4 months to pass it on to the client, especially if you're a brand like us, TT brand, which sells domestically. There's a 3 to 4 month gap because you have your stock, etc. And especially when you have such very steep spurts, which are like going on continuously for the last 15 to 16 months, and you've kept passing on the price increase, then obviously at some point of time, the consumer is also tired, your trade channel is also tired. And what's happening now, passing on to the consumer now in the last 3-4 months has become extraordinarily difficult. In fact, practically we have not been able to pass on from November onwards what we have seen in yarn increase because of stiff resistance. And what's happening in the domestic market per se is people are trying to match the price points at which the consumer is ready, which means a very significant shift is happening towards blends. That is man-made fibers, polyester and viscose is partly replacing cotton. And I think so that is in line with what is there globally, where we see in global perspective, we always see that man-made fibers share is 70% and cotton is 30%. While in India, because we have been predominantly a cotton economy and so much of cotton being grown, we have seen cotton having 60% share and man-made having 40% share. Now this year, which is a disruptive year, is seeing the shift being accelerated. And going forward, we're going to see much more use of polyester and viscose. And I think so that's a thumbs up to companies who are already making yarn, fabric or garments out of it. Hello.
Jain, good morning. This is Nayantara joining. Mr. Jain, good morning. Thanks so much for joining in. So you're saying that the entire mix and our garments could change just the way cotton prices have been moving up. The other point is, and you're saying people are tired of paying more, inflation at play. For your international business, because you sell you also export, etc., as does our other guests, you have the rupee in a free fall, which is great news for exporters. At the same time, input costs are going up. The sense I'm trying to get as is the rupee's free fall offsetting the hike in input costs?
No way. If you see, rupee is still very controlled. Even if you see the US dollar index, it has under rupee depreciation, there's still a big mismatch. Rupee 1 or 2% or 3% in a rupee can hardly make forward to double-digit inflation in practically any input that the industry is using. So I think so we are definitely going to be hit. We may protect our absolute margins, but percentage margins definitely are going to be a lot of pressure in the coming days.
Jen, we don't know yet if the government will temporarily ban cotton exports the way it did with wheat, but wheat was different. It was also to do with food security. There was a high-level meeting yesterday that was chaired by the Commerce Minister, Mr. Piyush Goyal. So since we don't know that, can you give us a sense of the orders that you may have, especially for exports? Are you able to renegotiate contracts? Do you have the negotiating power when our neighboring country Bangladesh has been stealing market share from Indian exports as well? At least when the LCs have not been opened, are you able to renegotiate contracts?
No. You cannot renegotiate a contract once firmed up either way, and that's the way trade happens. And cotton, I just like to clarify for those who feel cotton export ban is going to improve the short-term situation. Cotton and yarn, both in India, are relatively more expensive than international prices today. There's hardly any business happening. ban or no ban, already exports have almost slowed down to a trickle. So that is not really going to have a big, be a game changer in the short term.
Okay, so let's see what the government does. If it does anything at all, you've got cotton prices trading now at all-time highs. So let's see what happens. I'd like to thank both our guests for joining us today for this discussion.
Thank you.
Thank you.
And with that, ladies and gentlemen,